wherever it's come from, it's adding to more weight and momentum. We have Ashwini Mitesh with us. Mayuresh Joshi of Angel Broking is also joining in. Mayuresh, just your thoughts. I mean, there's a very sharp and swift reversal that's underway as we speak. Let's talk about a stock like Eicher Motors. Again, something that's been beaten down very badly last couple of sessions. Would you buy Eicher at current levels?
Afternoon, Surabhi. Again, I think clearly the kind of premiumization that Eicher probably derives and the kind of numbers that came out last month, there is obviously some amount of the headwind that the market feels, both in terms of fuel prices going up, the expectations of interest rates, which obviously the RBI has not increased, but the elevated costs still playing out along with higher insurance for its higher priced bikes. So whether that takes a toll on the overall demand is what the market is fearing at this point of time. But again, I think the large expectations, even when one assumes these short-term hiccups and bumps, is that the reversion to mean will probably happen both in terms of volumes and the expected two launches that Eicher is expected to come out with. So expecting strong demand to still persist. And again, I think with that strong demand, I think all these other variables as they normalize, I think does create the pent-up demand which probably stays in the system to come back very, very strongly. So still expecting strong earnings growth over the long term for Eicher Motors. The short-term blip, both in terms of volumes and margins, can play out on numbers. But again, I think from a medium to long-term perspective, I still find that the stock probably has greater earnings potential. So yes, I think it's a hold from my side, and a clear disclaimer, we hold this in our funds.
Okay, hold this in the fund. By the way, Mayuresh, your thoughts on a stock like Tata Power? I mean, if this resolution that this report is talking about does come through, in that case, at 62, is it a buy for you?
No, so Anuj, I think the valuations probably are very, very attractive at this point of time. And again, I think if the resolution starts coming through, you're probably going to see far more sanity happen in terms of their core business. So both in terms of realizations as well as the under recoveries that they've probably reported. I think a large chunk in terms of both these factors probably start ebbing off their balance sheet. The third element obviously becomes what do they probably do in terms of the imported coal. At this point of time, again, I think coal linkages and any use in terms of captive coal or the availability of coal is going to be extremely beneficial in terms of managing both the cost and the final pass-through in terms of final realizations. So yes, I think if such a resolution probably comes through, it obviously removes a couple of overhangs that the stock has. And yet at the current price, yes, I think there is value in the stock.
Okay, we've got the numbers in from Amphi. And at first glance, this is, I think, the first piece of decent news that we're getting in some time.
Mayuresh, your thoughts on the stock?
I think nothing prima facie wrong with the numbers, Anuj, that I saw. Again, in terms of the other income component being a little bit higher, I think whether the street is a little bit worried in terms of core organic growth not coming through. But again, I think the margins were more or less in line with expectations. What they delivered on the bottom line was more of a component in terms of the other income part as well. But again, I think the business line, both in terms of embedded solutions and the kind of technological support that it probably gives, both to Tata Motors in terms of R&D and the new models and otherwise, I think they've got a decent amount of business model on their hands. Now one might probably argue in terms of valuations and numbers being a little bit off the mark, that money is probably getting taken off the table. But my own expectation is that the top tier companies will probably report far better robust growth, both in dollar terms and constant currency.
Okay. Mayuresh Joshi, Ashwini and Mitesh are still in conversation with us. Mayuresh, I know nobody is talking mid-caps right now because of obvious reasons. But beyond the Nifty 50, any other stock that you're advising a buy on in the current absolute gloom and doom?
Yes, I think so. We're liking Bata India, and the entire premise here is the kind of expectations can one derive in terms of the unorganized market being almost 1/3 of the 60,000 crore market size that is there. The second element, obviously, in terms of their capex plans, they're expected to open 500 more stores in 400 odd tier 2, tier 3 cities. And that component itself is going to aid their volumes and realizations. The third element, obviously, is that the ladies' footwear is almost 30% of their top line. That is expected to go to 40%. And that's a high margin business. So I think looking at their balance sheet, it's a very strong balance sheet. The kind of product innovations that they're probably bringing out should also have a significant say in terms of their margin margin profile. And at the same time, I think we are expecting good amount of top line growth, 16% top line, 20% bottom line growth to probably play out in the next couple of years. So I think all the factors should probably help them in their earnings growth. So I think Bata on declines is something that we continue to like.
Mitesh,